Welcome to this explainer, where we are going to break down what might be the most important leap any trader can make, going from an emotional, gambling mindset to a disciplined, professional one. It's all about learning how to think, and maybe even more crucial, how to plan just like a pro.
So let's get straight to the core of it, because the difference is like night and day. On one side, you have new traders riding this wild emotional roller coaster, making decisions based on greed and fear. And on the other side, you have the pros. They operate from a plan. And look, this isn't some minor detail. It's literally everything. It's the huge gap between just gambling your money away and actually building a real system for success.
To really make this stick, we're going to follow the journey of a character from our source material we'll just call the new trader. He's been there, done that. He's seen the incredible highs and felt the crushing lows. And he's finally at that point where he says, okay, enough is enough. It's time to stop just reacting to the market and start trading with a real plan.
You know, for a professional, a trading plan is their business plan. Simple as that. It's their blueprint, the roadmap that guides every single move. So, how about we build one? Right here, right now. We'll do it just like our new trader did, by asking and answering the really critical questions that every pro has to nail down before they even think about risking a single penny.
Okay, question number one, and this is a big one to start with. What is your signal for getting into a trade? I mean, you can't just buy a stock because you have a good feeling about it, right? No way. You need a specific, repeatable signal that basically screams at you, okay, now is the time to act. So, what's your signal?
So our new trader, he decides his whole strategy is going to be about following trends. And his specific signals are all about buying into strength. He's looking for those moments when a stock breaks out to a brand new high, or when it punches through a major resistance level. You know, that price point where sellers usually show up in force. See? These are super clear, totally objective rules. We're not talking about gut feelings here.
All right, so knowing when to get in is obviously important, but you know what's just as critical, if not more? Knowing when to get out. Amateurs, they get obsessed with the entry, but the pros, they know the real money is made and saved on the exit. That's where you protect your profits and, just as important, you avoid those huge account-crushing losses.
So what does he do? He sets up a super clear rule of 5% trailing stop loss. Now what this means is, as the stock goes up, his sell point automatically moves up with it, kind of locking in those gains. But if the stock suddenly turns around and drops 5% from its highest point, bam, he's out, no questions asked. It's a really disciplined way to let your winners run while making sure you don't give all those profits back.
Okay, let's talk about what might be the single most important thing that separates the pros from the amateurs: risk management. It all boils down to one simple question. How much of your cash are you actually willing to lose if a trade goes completely south? He lands on a classic, time-tested rule. Never, ever risk more than 2% of your entire trading account on one single trade. And listen, this isn't about how much money you put into the trade. It's all about defining your absolute maximum potential loss. It sounds so simple, but trust me, this rule is incredibly powerful.
Let's break that down, because this is huge. Say you have a $10,000 account. That 2% rule means your max loss on any one trade is capped at $200. That's it. This one little rule makes it almost mathematically impossible to blow up your account. I mean, think about it. You could be dead wrong 10 times in a row and you'd still have 80% of your money left. But the real magic here, it's psychological. When you decide your maximum pain point beforehand, you get rid of that paralyzing fear of a total disaster. And that lets you think clearly and actually stick to your plan.
So how does this all connect to how much you actually buy? Well, that brings us to position sizing, another absolutely key piece of a pro's plan. And it goes hand in hand with managing your risk.
For the sake of consistency, our guy decided his standard trade size would just be $5,000, flat. This gives him a really stable baseline for every single trade. By keeping that dollar amount the same, he makes his process way simpler and takes one more variable out of the equation when he's trying to make a decision. Here's something every pro understands. You can't be an expert on everything. It's just impossible to trade thousands of stocks effectively. And that's exactly why a huge part of your plan has to be defining your own little universe of stocks. So you have to ask yourself, what kind of stocks am I going to trade?
His criteria? Super smart and really specific. First off, he's only looking at the hottest stocks, the ones with real momentum behind them. Second, they have to trade at least 1 million shares a day. He needs that liquidity so he can get in and out easily without any drama. And third, he wants their daily price swing to be less than 4%.
That just helps him keep the volatility under control.
So there you have it. The plan is written down, it's logical, it's disciplined, it looks perfect on paper. But here's the thing. Having the plan is just step one. The real challenge, the true test of a pro, is being able to stick to that plan when your emotions start screaming at you. And trust me, they will.
And almost as soon as he finishes writing it, the self-doubt starts to creep in. The first voice he hears, that's greed. It starts whispering in his ear that this careful, risk-managed plan is just too slow. It's saying things like, "Really? Is this it? Shouldn't you be taking bigger risks? You want to get rich faster, don't you?"
And right after greed comes its best friend, fear. Suddenly, his mind is racing, picturing the absolute worst-case scenario, a long, painful string of losses. He's actually starting to calculate how much he'd lose after 10 bad trades in a row, and he's just spiraling. And you know, this isn't just about the money. It's that deep fear of being wrong, the fear of failing completely.
And then, finally, the doubt gets, well, it gets existential. He starts questioning the whole thing, thinking about his old job and how safe and secure it was. And this is the ultimate battle that every single trader has to face. It's not you against the market. It's you against yourself. It's your rational, well-thought-out plan versus those powerful, primal emotions of fear and greed.
I mean, this just nails the internal battle, right? The legendary trader Ed Seykota put it perfectly. He said, it's not a bad strategy that most people fail. It's emotion. Hope, fear, greed. They're like banana peels just sitting on the floor, waiting for you to get distracted and stray from your plan. So what's the big takeaway here? It's that success in the market has nothing to do with some secret indicator or just getting lucky. It's all about discipline. It's about having the grit to follow your plan day in and day out, especially on the days when it feels like the hardest thing in the world to do.
And that, right there, is how the pros leave the gamblers in the dust. See, they don't sit there and pray for a trade to work out. They do the hard work before the trade ever happens. They study, they build a rock-solid plan, and they show up to the market ready to execute that plan no matter what happens on any one trade.
Now, if you want to dive even deeper into this stuff, the source material we used for this explainer actually points to this book by Matthew Galgani. It's a fantastic place to start.
So let's end with this one thought. We've just walked through the entire blueprint for a professional trading plan. It gives you the structure, the rules, everything you need for risk management to succeed. This plan, this is your edge. So the only question left is, are you ready to build it, to trust it, and to execute it with unwavering discipline?